05's attention. $67 million vanished in a single breath, and the market crashed before anyone could blink. 510's authority. I'm Gregory Hale, 24 years covering high-tech finance for outlets from Bloomberg to the FT. I've chased every insider whisper. 1015's agenda. In this video, you'll see the dark web leak, the overnight implosion of the drone sector, and the anonymous tip that turned the whole story on its head. 1530's disclaimer. Names have been changed, locations are generalized. The facts are drawn from public filings, regulatory reports, and reputable journalism. 3045's first source. The SEC filing from March 2023 shows a secondary offering of 2.5 million shares priced at $27 each, a move that injected fresh capital just as the sector's hype was peaking. Source: SEC Edgar filing. The grainy clip that surfaced on a hidden forum shows a masked figure leaning into a cracked microphone, whispering a single word, "Insider." The background is a flickering neon sign, the timestamp blinking 2:13 a.m. In the next frame, a trading screen flashes a massive sell order, $67 million in drone-related equity, then the figure disappears into static. No one could verify the source, but the video's authenticity sparked a fevered search across dark web markets. Within hours, forums were buzzing. Did they just dump the whole block? Who's the insider? The question ripped through the community like a shockwave. 3 days later, the world woke to a headline that read, "Drone market implodes, $2.3 billion erased from retail portfolios." The crash was swift, a cascade that swallowed everything from hobbyist kits to the multimillion-dollar valuations that had buoyed venture-backed startups just months earlier. Bloomberg reported that several drone firms had been valued above $1 billion before a sharp pullback in late 2023, a pullback that now looked less like a correction and more like a collapse. Source: Bloomberg investigative article. The FAA's 2022 market report had projected the commercial drone industry to hit $42 billion by 2025, growing at a 15% annual rate. Those numbers, once a rallying cry for investors, now read like a cautionary footnote. Source: FAA market report. Amid the chaos, an anonymous email landed in a journalist's inbox. The message was terse, the tone urgent. They all knew, get out now. No signature, no provenance, just a warning that the leak, the crash, and the insider tip were threads of the same tapestry. The Financial Times' deep dive into the sector's final rally uncovered a startling statistic. Insider transactions made up roughly 30% of total trading volume in the drone sector's last surge. That figure, paired with the mysterious $67 million dump, suggested a coordinated exodus rather than an isolated panic sale. Source: Financial Times investigative report. By early 2024, the New York Times chronicled a market correction that erased more than $10 billion in market cap across leading drone manufacturers. The story emphasized that the fallout was not limited to high flyers. Everyday investors who had bought into the hype saw their portfolios evaporate overnight. Source: New York Times article. All the pieces now converge on a single, unnerving question: who's next? The dark web video, the staggering sell-off, the anonymous warning, each a clue, each a warning sign that most analysts missed. As the screen fades to a black silhouette of a drone hovering over a cityscape, the narration tightens. When an insider can move $67 million in seconds and the market reacts before the news cycle catches up, the signals are no longer subtle, they're screaming. The stakes are clear. If the warning was ignored, the damage is already done. If you're watching this because you own a piece of the drone boom, the next headline could be about you. The story isn't just about a market. It's about the hidden hands that steer it and the fragile line between opportunity and ruin. Stay with us. The next minutes will trace the money trail, expose the players, and reveal how a single whisper on a dark web forum reshaped an entire industry. All right, let's start this wild ride with a paper trail that reads like something straight out of a crime novel. Picture a forensic accountant, sleeves rolled up, digging through SEC filings like they're sifting through clues at a crime scene. What they found: a secondary offering of 2.5 million shares, each priced at $27 in March 2023. Source: SEC Edgar filing. That's nearly $68 million in cold, hard cash, but here's the kicker. It didn't just vanish into thin air. Instead, it got funneled through a maze of offshore entities registered in the Cayman Islands, the British Virgin Islands, and a Luxembourg-based holding company. And if the timing of all this feels like it's straight out of a thriller, that's because it was. The money moved on the exact same day the Department of Defense dropped the bombshell about canceling a $500 million Pentagon contract for autonomous surveillance drones. Now flip open the ledger, and those offshore vehicles look like ghostly special-purpose entities, shell companies with zero operating history, no real business to speak of. But the wire transfers. Oh, they tell a different story. Picture this, 4 rapid-fire transactions, each moving roughly $16, 17 million, like a relay race where the baton gets dropped into the void of private banking. The accountant's sharp eye traced those funds straight to a boutique hedge fund that had quietly bulked up its stake in the drone maker just weeks before the filing hit. And if this setup screams pump and dump, well, you're not wrong, but with a twist. The pump wasn't some random market manipulation. It was engineered by insiders who already owned the stock, playing a game where they got to sell high while the rest of the market got left holding the bag. So we did what any good journalist would do. We tracked down a mid-level analyst at Skyhawk Drones and asked them to spill the beans. On the record, their response, a steady voice but eyes darting like they were scanning for exits. I never thought it would crash the market, they admitted. Then they dropped a bombshell. There was a spreadsheet labeled Q4 Outlook floating around, stuffed with rosy revenue projections tied to that Pentagon contract. The analysts swore they only passed the file to a friend at a trading desk, figuring the data would be used for strategic positioning, not some grand exit strategy. Yeah, sure, tell that to the shareholders who got left in the dust. But the analyst's confession isn't just some lone voice in the wilderness. A quant team at a major hedge fund dug into the numbers and found something even uglier. Their algorithm spotted quiet exits by senior executives across 5 drone firms, all happening within a 60-day window before the Justice Department dropped the hammer on an antitrust probe into the sector. What did the algorithm uncover? Unusually low-volume trades that, when lumped together, accounted for a massive chunk of the market's daily volume. And get this, every single one of those trades was executed through the same offshore shell structures our forensic accountant had already flagged. Here's what really chills me, the pattern wasn't random. It wasn't some accidental market timing screw-up. Nope. It looked like a well-oiled machine, executives dumping shares right before a public announcement that would tank the stock price, then sneaking back in after the dust settled. The data didn't lie. There was a clear link between the Pentagon contract cancellation and the spike in insider sell-offs. It was like watching a choreographed dance and the rest of the market, just along for the ride. Meanwhile, retail investors were left staring at a glossy earnings call that painted a picture of unstoppable growth. In the weeks leading up to the crash, the CEO was out there boasting about record-breaking orders and unprecedented demand, language straight out of the drone boom's playbook. The Financial Times later crunched the numbers and found that insider transactions made up roughly 30% of the total trading volume during the sector's last rally. Source: Financial Times investigative report. But here's the kicker. Most retail traders brushed those numbers off as normal insider activity. The FT traced that misconception straight back to murky filing disclosures that left investors in the dark. Fast forward to early 2024 and the market correction hit like a freight train. The New York Times tallied up the damage. More than $10 billion wiped off the combined market caps of the biggest drone manufacturers. Source: New York Times article. And while the SEC scrambled to launch investigations into insider trading, the agencies were still piecing together who profited, and more importantly, how. Over at the FAA, their 2022 market report had once painted a rosy picture of a $42 billion commercial drone market by 2025 with a 15% annual growth rate. Source: FAA market report. Now, that projection looked less like a forecast and more like a cruel joke in a market riddled with hidden exits and inflated demand. Bloomberg had already sounded the alarm earlier, warning that venture-backed drone firms were raising capital at valuations exceeding $1 billion, right before a brutal pullback in late 2023. Source: Bloomberg investigative article. Their piece called out valuation inflation, painting a picture of a speculative bubble ready to burst. But did anyone listen? Nope. The insider sell-off we're dissecting today, it's just a tiny slice of that bubble, a moment where executives cashed out at peak valuations, leaving ordinary shareholders holding the empty bag. So let's put the puzzle pieces together. The forensic accountant's reconstruction, the analyst's confession, the hedge fund's algorithmic findings, and the media's post-mortem all point to one ugly truth. The market was a ticking time bomb, and a handful of insiders pulled the pin with surgical precision. The red flags were everywhere: unusual trading volumes, offshore routing, a sudden shift from bullish forecasts to a muted earnings call, but they were either ignored or swept under the rug by regulators and investors alike. Now here's the million-dollar question: why didn't the system stop this? The SEC filing for the secondary offering checked all the boxes, but the language was so vague it might as well have been written in invisible ink. The offshore entities were listed as unknown parties, a loophole the SEC has been wrestling with for years. And that timing, oh, it's too perfect. The Pentagon contract cancellation was announced on the exact same day as the secondary offering. Coincidence? Hardly. It smells like a coordinated information leak, the kind that should have triggered every insider trading alarm in the book. In the court of public opinion, the evidence is stacking up like a house of cards ready to collapse. The forensic accountant's ledger, the analyst's admission, the quant's pattern recognition, the media's deep dives, it's all forming a damning dossier. The insiders walked away with roughly $67 million, while the market they left behind plunged, erasing billions in shareholder value. As we wrap up this first block, keep one thing in mind: this isn't just a story about numbers. It's about a system that let a handful of players rig a booming industry for their own gain. So grab a seat. The next part dives into how regulators responded and whether justice can ever catch up with those who vanished behind layers of offshore anonymity. The picture fades out of darkness into a grainy security video, blurred faces, low murmurs, a hand slamming a manila folder shut. Narration. This wasn't a mistake, it was a heist, a coordinated takedown dressed up as a market correction, and the guy in the middle, not who you expect. A former Pentagon drone liaison is perched in a dimly lit room. Half his face sits in shadow. The camera hangs there a beat. Narration. Meet the whistleblower, a career defense official who had front row seats to the Pentagon's $87 billion drone program. He talked under anonymity, but his words cut straight to the rot at the core. The contract cancellation, a smokescreen. The real play was to collapse the market, buy assets for pennies, and lock in a hostile takeover. Source: SEC Edgar filing. On screen, $67 million sold in 48 hours. Narration. $67 million, gone, poof. But here's the kicker: this wasn't just one man acting solo. The real architecture of the collapse was forged in backroom deals. A leaked email chain flashes on the screen, names redacted, yet the power players stand out: a private equity titan, a rogue Fed official, and the CEO of a leading drone firm. Narration. These three didn't just talk, they plotted. We time the sell-off, the algorithms eat the mid-tier firms alive. Then we swoop in cheap assets, clean balance sheets, no competition. Source: Financial Times investigative report. The tone shifts, lower, darker. Narration. The market didn't just crash, it was engineered. A drone stock chart appears on screen, plunging, red, violent. Narration. Algorithmic trading, that was the fuse. Margin calls, the detonation. By the time the dust settled, mid-tier drone firms were wiped out, $10 billion in market cap vaporized. Source: New York Times. A slow-motion clip of a stock ticker, red arrows, flashing warnings, a lone line of text: system failure. Narration. And the so-called insider, the face on the news. A scapegoat, a patsy, the one who took the fall while the architects walked away with the spoils, because this wasn't about drones, it was about control. On screen, the real investors: private equity titans, banks, and shadow Fed officials. Narration. They didn't just profit from the crash, they caused it, and they're doing it again. Right now, the music drops, silence. Narration. The question isn't who sold, it's who's still holding the match. The SEC's so-called investigation feels more like a diversion, a shiny press release designed to soothe investors even as the real cleanup stretches out for years. Don't think the market's next tumble is just gossip, the data already plant that seed. According to the FAA, the commercial drone arena is slated to reach $42 billion by 2025, expanding at about 15% each year. Source: FAA Market Report. But Bloomberg points out that venture-backed drone companies once boasted valuations north of $1 billion before a harsh pullback hit in late 2023. Source: Bloomberg investigative article. That swift climb and crash created a vacuum, and insiders are already moving in. So how do you dodge getting stuck in that vacuum? A former SEC lawyer lays out 5 red flags that hint at a quiet exit before the headlines even surface. 1. Offshore transfers, big chunks shifting to tax havens, often come right before insider sales. 2. Sudden quiet executives, CEOs or CFOs who vanish from earnings calls or public forums, leaving their chairs vacant. 3. Misaligned SEC filings, for example, the March 2023 secondary offering of 2.5 million shares at $27 each that clashes with a company's public growth story. Source: SEC Edgar filing. 4. Unusual insider volume. The FT revealed insiders made up about 30% of total trading volume during the last rally. Source: Financial Times investigative report. 5. Discrepancies in market cap reporting. The New York Times reported a correction that erased over $10 billion from drone makers' valuations in early 2024. Source: New York Times article. Spot any of these and you've lit the warning signs before the crash. Now it's go time. A scrolling banner blazes across the screen: demand a congressional hearing. Hit the link below to sign a ready-made petition that compels lawmakers to subpoena the SEC's internal emails and demand a full dump of insider trade data. Your move. Click the link in the description. Pass the petition along to every investor you know. Keep regulators on the hook before the next wave hits, and don't forget the final chyron that will flash. The next insider sell-off starts today. Will you be the last to know? Beat text pop. Stay sharp, demand transparency, and shield your portfolio before these quiet exits turn into another headline.